So putting aside your outrageous predictions for 2015, what do you think the year ahead will look like?
If you had three inputs, energy prices, interest rates, and currency, what would be the path of least resistance? Clearly, the world is not functioning well with a strong dollar. So the top line for next year in terms of currency is lower dollar. In terms of energy, the world right now is battling out whether this inflation impact from low energy or the increase in discretionary spending is more important. The analyst thinks discretionary spending is more important. The market seems to think that the deflation is more important. Energy needs to stabilize to be slightly higher. And in terms of the interest rates, we know for a fact that debt to GDPs is rising, certainly in Europe, but all of the world, so lower interest rate. So if you take the path of least resistance, it means a slightly weaker dollar, unchanged interest rates, and a slightly more stable to higher energy. And I think exactly that's what happened, because at the end of the day, water flows to the lower point. Gravity is existing even in these financial markets. But I think in asset terms, the big play next year is to realize that being in so-called safe, high-yield place is not going to work. Next year is about the transition from the 20% of the economy, which is the listed companies and governments, into the real economy. I think 2015 is a great year for employment, it's a great year for productivity, it's a great year where we turn around. But first we need to get to that bad point in Q1, Q2.
So how do you think we should approach the year ahead?
Prepare, rest well, train well, because 2015 is guaranteed to be more volatile. And I think as we come into 2015, end of Q1, that would be exactly 9 months since oil prices and the euro started to fall. My rule of thumb is always 9 months is the time it takes for a macro impulse to work. So be, as I am, long fixed income, conservatively long the equity you need to own. And then as you come into Q1, Q2 next year, you need to be buying when everybody else will be selling.